Alright, so Coca-Cola's Q2 2025 earnings are in, and investors are paying close attention. From revenue trends to margins and guidance, here's what you need to know before making your next move on this Buffett-backed stock. Looking at the quantitative, in the second quarter, net revenues rose 1% to $12.5 billion compared to last year. However, looking at non-GAAP results, organic revenues actually rose by approximately 5% when adjusted for changes in currency and other non-recurring items. And the increase, well, it's primarily due to improvement in their pricing mix and strategy, something I'll touch on later in this video. Now, looking at profitability, operating income came in at $4.28 billion, up 63% year over year. As you can probably tell, this was due to a major decrease in other operating charges, which decreased by 95%. I looked into this further, and this decrease was tied to the remeasurement of the contingent consideration that they expected to pay Fairlife for their acquisition. Now, in simple terms, they booked an expense just in case they had to pay a large amount for Fairlife, but now they believe the actual payment will be much smaller. So they took some of that expense back, hence resulting in this massive gain. Therefore, this led to a net income of approximately $3.8 billion, which is about a 58% increase year over year. Similar to before, although this might sound great, it's really not. When we exclude the Fairlife adjustment and normalize the net income, the year-over-year change is actually only 4%, or about $150 million. Moving on to EPS, that increased by 4% as well, when looking at it from an adjusted measure of 84 cents a share to 87 cents a share for the quarter. And operating cash flows from an adjusted measure increased by about $600 million year to date. Lastly, for forward guidance, Coca-Cola expects 5 to 6% organic revenue growth and approximately 3% comparable EPS growth for the full year of 2025, with free cash flow projected at $9.5 billion excluding the Fairlife payment. So the company remains fairly optimistic, and notably there hasn't been any downward revision to their guidance, which has helped prevent any significant sell-offs. Moving on to some qualitative stuff, Coke Zero's sales volume grew by 14% globally, which indicates a shift in consumer preferences. However, total sales volume actually declined by 1%, and this was due to weakness in the Asia Pacific and Latin America region. As you can see, this also affected their bottling investments, as fewer bottles were sold as a result. Thankfully, the price mix strategy that I talked about earlier offset this decline, resulting in some favorable revenues overall. But this is still something to consider if you're looking to purchase this stock. Now, I think this just shows that Coca-Cola needs to find a way to stabilize and increase volumes to further boost revenue, because you can't solely rely just on price adjustments alone. Now, let's turn to Coca-Cola's current valuation and stock performance. The stock is currently trading around $69 to $70 per share, down a modest 0.11% over the past month, but showing a strong 12.65% gain year to date. While Coca-Cola isn't typically viewed as a high growth stock, it remains a popular choice amongst income-focused investors, a key reason why Warren Buffett continues to hold a large stake. Now, the company offers a solid dividend yield of 2.93% and has a long-standing reputation for delivering consistent, reliable, and steadily growing dividend payments to its shareholders. Analyst sentiment toward Coca-Cola has remained positive and even strengthened slightly in recent months. The current consensus rating is buy, up from overweight 3 months ago. While the number of buy ratings dipped slightly from 20 to 18, overweight ratings increased and hold ratings declined, indicating growing confidence. Notably, no analysts currently rate the stock as underweight or sell, which is terrific. Coca-Cola stock is currently trading at $69.60, and analysts project a 12-month price target range between $70 to $86. The median target is $80, representing an upside of approximately 15%, while the average target of 79.5 suggests a potential gain of around 14% from the current price. Overall, analysts see moderate upside for the stock over the next year. Now, in terms of my opinion, I think Coca-Cola appears to be a solid and safe stock for investors seeking reliable dividend income with moderate long-term upside. While there is potential for gains in the underlying stock, these may take time to materialize due to the softening consumer demand and currency-related pressures the company is facing. Now, if you found this analysis useful, show your support by subscribing to the channel and dropping a like on the video. Let me know in the comments below if you'll be adding this stock to your portfolio. As always, thanks for watching, and I'll see you in the next one.